Today marks the first significant step toward resuming student loan payments.
Interest rates will begin accruing with the first payments due in a month. Here to help us crunch the numbers and tell us how student loan interest works is University of Houston downtown professor Dietrich Von Biedenfeld. Good morning to you. Welcome. I see we've got the board out. We're ready to truly crunch some numbers. So how do you calculate this and truly understand how it all works to begin with?
Well, context is key. So the biggest challenge is different interest rates, different loans and variable rates. Most, fortunately, with student loans are simple interest rates. So we don't have to do this complex formulaic calculation with compounding the interest and multiplying by 365 and then trying to, all of that is left out because most of these loans and all federal loans are going to be simple interest rates where you are calculating based on the interest, and we've got 37,000 as sort of the central average number for the student loan borrowers. And I just quickly put up here 5% and 10% rates, what the monthly payment would be over sort of a 10-year period. Now you can extend it over 20 years and that would lower the monthly payment, but the compounding interest would be exponentially greater, right? And so when you look at some of these loans and you end up with 43,000 to 47,000 are repaid from the 37,000 that you originally borrowed, this is a substantial difference. This is
huge.
We're starting to get into the house down payments. Well, not at the current rates, right? Maybe a car down payment. So when we think about these things, student loan borrowers really need to think about paying early. I mean, the biggest issue is if you can prepay some of this loan and knock down that principal, that will lower the monthly payments, but it will also lower the interest rate because that's how it's calculated. So even $150 extra a month can reduce the payment schedule by years.
And if a fixed or a variable rate is going to determine what you pay too.
Absolutely. And so hopefully you've locked in something. Now is not necessarily the time to refinance, and while the Biden administration has implemented a number of plans for student loan repayment forgiveness, we saw that the overall blanket forgiveness was shot down in the courts. So most of these folks are going to restart on October 1st. Fortunately also though, there have been measures where if you default, that won't show up on your credit history for another year. So if you are struggling to repay, you have until October 1st, 2024 to really worry about that hitting your credit score.
Okay, so what happens if you're not making those full payments? What does that start looking like?
It gets very dangerous because every time you add this interest rate and every amount that you've left, that's where they calculate it from. So some folks could end up paying even $50,000 or $60,000 over the life of the loan if you reduce it. So refinancing it or even taking forbearance is simply accruing interest. You're not paying it, it's out of sight, out of mind, but the interest is still accruing in the background and you'll have to repay that. So prepayment, paying a little extra each month can help, even if it's $10 or $15. That can help you reduce the loan duration and the overall amount.
So what if somebody is struggling and they can only make a partial payment? What do you suggest that person does? First,
look on the website, see what options you've got. Is there an income-driven repayment option that you qualify for based on your income and your family size? Because if you're a family of 4 and you make less than $65,000 for that family, you may qualify for a special plan where the government will step in and help reduce it automatically. So definitely look at what your options are first before you say, I'm not paying it, or leave it out there.
And no matter how badly you want to go to some huge college, sometimes you really need to look at your expenses, right? And perhaps go to one that's maybe not your top tier, but something that you can afford more so you don't get into all this debt and trouble.
Absolutely. And you really need to look at what the prospective incomes are for the careers that you're looking for. Several colleges had programs where they said, hey, if you're going to do English literature or creative writing, you can't really study in New York City because the student loans don't just cover tuition. Many times they cover books, they cover food, and they cover other living expenses. And if you're in a city like Miami or New York City, that's going to be exponentially higher than staying local.
All right, Dietrich Von Biedenfeld, thanks for breaking it down and crunching the numbers, getting out the white bar. Yeah, you got a big game, and I see you have your baby blue on, which is appropriate for their new uniforms this
weekend. Oilers this weekend. That's going to be fun. All right, thanks again.